Welcome everyone to How Can Digitalization Add Value to Mitigate Risk, a webinar part of the Risk Minds Digital Week. My name is Afif. I'm one of the producers here, and I'd like to welcome Sajid Iqbal, who's the Vice President, Head of Market Liquidity and Wealth Management Risks and Multi Risk Management at Habib Bank Zurich. So today we're going to be discussing digital transformation and risk management, specifically digital tools used to enhance risk profiting and digital technologies' impact on operational efficiency.
Yeah, thank you, Afif. And good morning, good evening, good afternoon, wherever you are, everyone. So I'm thrilled to welcome to you to today's webinar. As Afif mentioned, my name is Sajid Iqbal, and I've been working in the banking sector for over a decade, specializing in risk management and operational efficiencies. So I'm passionate about leveraging technology to solve real-world problems, and today we are going to explore one such critical area. So our today topic is how can digitalization add value to mitigate risks. This is a subject of immense importance as we navigate through an era of rapid technology advancements and ever-evolving financial landscapes. So here's a quick overview of what we'll be covering today. So we'll start with fundamental understanding what risk management is in banking entails and why it's crucial. We will then delve into the types of risk that banks faces and how digitalization can play a pivotal role in mitigating these risks. Finally, we'll look at some real-world examples of banks that have successfully integrated digital tools to enhance their risk management practices. I hope you will find this session insightful and engaging. So without any further ado, let's get started. So let's begin with basics. What is risk management? So simply put, risk management is the process of identifying, assessing, and controlling threats to an organization capital and earnings as well. So these threats can come from various sources, including financial uncertainties, uh, legal liabilities, strategic management errors, accidents, and natural disasters. So now, why is managing risk is so critical in banking industry? Uh, Firstly, it's about protecting financial stability. So banks are the backbone of our economy, and any significant disruption in their operation can have far-reaching consequences. So effective risk management ensures that banks can withstand financial shocks and continue to operate smoothly. Secondly, managing risk is essential for ensuring regulatory compliance. The financial industry is heavily regulated, and banks must adhere to myriad of laws and regulations. So proper risk management helps banks to avoid hefty fines and sanctions by staying compliant to these regulations. Lastly, and perhaps most importantly, it's about safeguarding customer trust. So customer entrust banks with their hard-earned money, and any breach of this trust can be detrimental. By effectively risk managing the risk, banks can protect customers' assets and maintain their confidence. There are various types of risks that banks needs to manage. You can see on the slide that there are financial, non-financial risks. So, for example, credit risk, which is a risk of borrower defaulting on a loan, market risk, which involves losses due to changes in market condition, and operational risk, which arises from failed internal processes, systems, and people, and compliance risk, which pertains to violation of laws and regulation. So, understanding and managing these risks is not just a regulatory requirement, but a business imperative. And this is where digitalization comes into play, offering powerful tools and solutions to enhance our risk management capabilities. So let's dive deeper into how digitalization can help us mitigate these risks effectively. So let's start with quick definition. Um, Digitalization in banking refers to the use of digital technologies to transform business models. It creates new revenue streams and provide value producing opportunities. So essentially, it is about leveraging technology to enhance how banks operate and serve their customers. So now, what are the current trends driving this digital transformation in financial sector? So you can see I list quite a few of them. So let's say cloud computing. So cloud computing is becoming a cornerstone of digital banking. It offers scalable and flexible infrastructures, enabling banks to store, process vast amount of data. Um, this is not only reducing the cost, but also enhance the data accessibility and security. So bank can now access and analyze data in real time, leading to more informed decision making. Another important trend is fintech solutions. So fintech companies are bringing innovative solutions to the banking sector. For example, from mobile banking applications to robo advisors. So basically, fintech is enhancing customer experience and operational efficiency. These solutions are often more agile and customer centric, allowing banks to offer personalized services and stay competitive in rapidly evolving market. Another important trend I would like to mention is the blockchain. So blockchain technology provides a secure and transparent way of recording transactions. So it reduces the risk of fraud and error. It ensures the integrity of financial data, and by creating a immutable ledger, blockchain actually enhances the trust and security in financial transactions, which is crucial for risk management. And more importantly, I mean, everyone knows about it and everyone is talking about it, is basically AI and machine learning. And this is a very uh, new trend. And AI machine learning are basically game changers for banking industry. So these technologies enables banks to analyze vast amount of data quickly and accurately. So identifying patterns, predicting future risks. So basically, they support various applications from fraud detection to customer service, and allowing making banking operation smarter and more efficient. Okay, now let's dive into how these digital advancements benefits risk management specifically. So it enhanced the data collection and processing. So digital tools basically enables banks to collect access the data in real time. This is crucial for risk management because it allows for immediate analysis and response. Bank can monitor transactions as they happen quickly, identifying any anomalies that might indicate potential risk. With advanced analytics, banks can process vast amount of data from multiple sources. So this comprehensive view helps in identifying underlying trends and correlation that might not be apparent with traditional analysis methods. So it allows for a more nuanced understanding of risk. Another benefit we can talk about is improving the accuracy and efficiency. So automation actually reduce the reliance on manual processes, which are often prone to errors. So by using digital tools to handle routine tasks, actually banks can ensure more accurate data processing and reduce the risk of human error. This is not only to improve the accuracy, but it also frees up the staff to focus on more strategic activities. Another benefit is digital tools actually helps to it enables the faster analysis and reporting. So AI driven analytics can quickly sift through the data to provide insights, which allows risk managers to make informed decision promptly. This speed is essential in fast-paced financial environment, because we all know that delays can be costly. Uh, Other benefits, for example, monitoring and decision making is also from these digitalizations. We can have uh, banks basically can continuously monitor their risk environment. So this constant vigilance means that risks are identified and assessed in real time rather periodically. So it allows for more dynamic and responsive risk management. Uh, Another benefit we can talk about is the real-time data. So real-time data and advanced analytics basically enables banks to develop proactive risk mitigation strategies. So instead of reacting to risk after they occur, bank can anticipate potential issues and take preventive measures. This proactive approach actually reduces the likelihood of significant disruptions. So in nutshell, I mean, digitalization is just not a trend. It's basically a necessity for modern risk management in banking. And by adopting cloud computing, integrating fintech solutions, leveraging blockchains, and implementing AI and machine learning, so banks can enhance their risk management processes significantly. These technology provides us the real-time access, improve accuracy, and enable proactive risk management. So ultimately protecting financial stability, ensuring regulatory compliance, and safeguarding customer trusts. Okay, so now we can explore, we have already explored how data analytics and artificial intelligence are uh, actually enhancing the risk management. Uh, so we can talk about something, risk profiling, how data analytics can help us in doing the risk profiling. So big data is the heart of the modern risk profiling. So by aggregating large data sets from multiple sources such as transaction records, social media activities, and credit scores, so bank can gain comprehensive view of customer financial behavior. This vast pool of data then allows us to identify trends and patterns that were previously hidden. For instance, spending habits, payment history, and even social media interaction can reveal a lot about customer risk profile. Proactive analytics takes these steps further. So by using statistical algorithms and machine learning techniques, we can actually forecast potential risks before they materialize. For example, predictive models can assess the likelihood of a customer defaulting on a loan or identifying potential fraudulent activities. So this predictive approach not only enhances the decision making with data driven insight, but also allows banks to take preventive measures, and it helps to reducing the overall risk exposure as well. Okay, now let's talk about something AI is being used in risk management. So AI algorithms, particularly machine learning models, have proven to be highly effective for credit scoring and fraud detection. So machine learning models analyze historical data to understand the factor that contributes to credit risk. So these models actually continuously learn and adopt, improving their accuracy and over time. Neural networks, a type of AI, are particularly adopt to detecting fraud. So they can actually identify subtle patterns and anomalies in transaction data that might indicate fraudulent activities. So this will allow banks to respond swiftly. Machine learning models for predicting default risks is another area where AI can shine. So by training models on historical data, banks can actually predict which customers are likely to default on their loans. So these models consider a wide range of factors, including credit history, income levels, and spending patterns. So, excuse me. So the continuous learning and adaptation capabilities of these models actually means that they can get better over time, and they can provide more accurate predictions and helping banks to mitigate risk effectively. Okay, let's bring this to life with real world example. So as you can see on the slide, I've mentioned that JP Morgan Chase has implemented an AI based credit risk management system. They call it Coin, or contract intelligence. So what this AI automation do actually? So this AI solution actually automates the review of legal documents and extracts critical data points to assess the credit risk. So by leveraging machine learning, actually, Coin can analyze a vast amount of data very quickly and accurately, which was actually previously a very time consuming error prone task. So because it was done manually. So what are the benefits actually they have achieved from this AI automation. So benefit they have observed is basically they have reported improved accuracy in their risk profiling. Because AI system can process more data and identify risk factors more effectively than traditional methods. So this has led to reduce the default rates, as the bank can now proactively manage high risk accounts. Additionally, customers satisfaction has improved actually. So because loan approvals are faster and more accurate, and thanks to this streamlined process enabled by AI. So in conclusion, we can say that digital tools like data analytics and AI are not just buzzwords. They are powerful technologies that are enhancing risk profiling and management in profound ways. So by leveraging these tools, banks can not only protect themselves from potential risks, but also provide better services to their customers. Okay, next we can talk about improving the operational efficiency. So with automated system in risk management, basically, how automated system actually streamlining the processes, reducing the errors, and cutting the cost using this or these automations. So firstly, let's talk about automation in transaction monitoring and compliance checks. So in today's fast-paced financial environment, the ability to monitor transaction in real time is crucial. So automated system enables banks to continuously track transactions from suspicious activities, flagging potential issues as they occur. So this real-time monitoring is essential for identifying and mitigating risk promptly. Moreover, automated compliance reporting simplifies the often complex time-consuming tasks of ensuring regulatory adherence. Instead of manual data collection, report generation, automated system actually compiles the necessary information and produce compliance reports swiftly and accurately. So this not only saves the time, but also ensures that reports are consistent and free of human error. I've seen some questions. I will answer them definitely at the end. So next we can talk about something. I think I have covered this topic. So we can quickly jump to the case study. So to illustrate the benefits, let's look at a real world example. A large US or regional bank in collaboration with Genpact implemented a robotic process automation system to meet the requirement of Bank's Secrecy Act. So this legislation actually requires banks to assist in detecting and preventing money laundering, which involves extensive compliance monitoring and reporting. So banks automation solution focused on automating data gathering and compliance checks. Actually, the RPA system was designed to handle routine tasks such as data entry, validation, and reporting, which were previously done manually. So this automation ensured that compliance activities are completed accurately and on time. So it reduces the risk of regulatory breaches. So what are the benefits we can see out of this RPA? So basically results were very impressive. So banks actually observed that significant reduction in compliance cost because automated system reduced the need for extensive manual labor. So issue resolution times improved dramatically as the system could identify and flag compliance issue in real time. It allows for a quicker response. Additionally, the automated process created more robust audit trails, enhancing transparency and accountability. So in a nutshell, we can say that automation and digital tools are basically transforming the risk management operational efficiency in banking. So by implementing automated systems for transaction monitoring, compliance checks, routine tasks, So bank actually can reduce the cost, they can minimize the errors and streamline their operations. So real world example of this US regional bank demonstrate that tangible benefit of these technologies and how they can enhance the compliance and operational efficiency. Okay, there are questions coming, so I will respond to them at the end of the presentation. Um, so now we can talk about what are the um, how we can integrate digital tools in our existing system. So what are the steps involved when we are trying to integrate, and then what are the challenges and best practices we can adopt. So the steps I can suggest that as a first step, we always should start by evaluating our existing IT infrastructure to understand its capabilities and limitations. So identifying areas where we need upgrading, where we need support of new digital tools. So once we'll identify and assess the current infrastructure, the next thing we can do is to determine where the new tools will integrate into the system, into our current system. So this involves mapping out the data flows and understanding how different systems will interact. So after doing this, we can implement any solution in a phase manner. So roll out the new technology into phases actually, and then begin with the pilot phase to test first of all, and then integration on a smaller scale. Then you can gather the feedback and make necessary adjustments before the full scale implementation. And what are the challenges and best practices uh, we can see? So for example, implementing robust security measures for our sensitive data. So this will address the data privacy and security concerns. So this includes, for example, encryption, access control, and regular security audits. Compliance with the data protections is also very crucial to avoid the legal issues. Another important challenge, or you can say the best practice we can adopt is basically ensuring the staff are adequately trained. So we need to develop comprehensive training programs to ensure that staff understand how to use the new tools effectively. And continuous training and support are essential to maintain productivity and minimizing the resistance to change. And other thing we can improve on as a challenge, and we can adopt the best practices about the continuous through the continuous monitoring and improvement. So basically we need to continuously monitor the performance of integrated system, and we can use the analytics to track key matrices and identify areas for improvement. So regular updates and maintenance are necessary to ensure that the tools remains effective and secure. So in conclusion, what I can say is digital tools actually offers immense potential, and immense potential for actually enhancing the risk management. So there are many tools and platforms available. For example, SS risk management or some IBM open pages we have seen. So these kind of tools actually enhance the data-driven decisions and improve the accuracy in our processes. So, okay, I can address some of the questions. So, Jaswinder Singh actually asked that AI and machine learning is increasingly used by banks for various activities such as fraud detection, assess credit score of customer, etc. So, what are some of the risks posed by these technology advancements which banks needs to worry about and probably include in overall risk management? So I would say that, see, any technology brings their own risk associated with them. So for example, we need to, first of all, we need to see that how what is the need of the organization to implement that solution. So it's not just that AI and machine learning will help in every activity, because it depends on the size and the complexity of the organization. So if it's really a case where you need to use these AI and machine learning solutions, so first you need to assess the requirement. So as I mentioned, in the steps to integrate new technologies, you can see these steps, by following these steps, actually we can ensure that all the risk associated with the technology can be assessed in the first step itself. So we can assess our infrastructure, we can assess how we can get benefit out of this new AI and machine learning solutions, and then how we can integrate these systems into our current system. So by doing this, actually, we can detect all those possible risks associated with these new technologies. So I hope I have answered this question. Okay, so uh, we can talk about something actually in the previous slide as well. I can take you back to uh, yeah, this we have talked. And yeah, so basically robotic process automation, I would like to spend some time on that as well. uh, I think there was some slides on that. Yeah, here. So we have we have uh, uh, we have a lot of information that we can do a lot of robotic process automation. So what robotic process automation is all about? So it's basically the ability uh, to automate all the manual tasks, uh, which which actually requires more repetitive kind of resources. So for example, data entry, data reconciliation, and basic data transaction processing. Basically, these are the prime candidate for robotic process automation. So by automating these tasks, actually, banks can significantly reduce the operational cost and minimize the risk. So basically, RPA, robotic process automation, works around the clock, so without any fatigue, and it also ensures that tasks are completed accurately and on time. So this actually frees up the human employees to focus on more strategic and analytic activities, enhancing overall productivity. So how we can streamlining the processes with digital workflow? So basically, by digitizing the approval process and centralizing the document management. So by doing this, banks actually can streamline their operation and reduce the time to complete the various tasks. For example, digital approval process eliminates the need of physical paperwork and manual signatures. So approvals can be completed electronically, which will speed up the decision making and will reduce the bottlenecks. So similarly, centralized document management ensures that all the necessary documents are stored in a single and easily accessible location. So this not only saves the time, but also reduces the risk of lost or misplaced documents. Another benefit we can talk about is actually uh, digital tools ability to reduce the manual errors and improve the accuracy. So automated basically data validation checks data entries for consistency and accuracy. It can flag any discrepancies immediately. So this will ensure that data used for decision making is reliable and accurate. And additionally, real-time error detection is very important. So correction, so basically real-time error detection and correction capabilities, which can enable banks to identify and rectify the error as they occur, rather than discovering them later during the audits or reconciliation. So this proactive approach actually reduce the risk of financial losses, enhance the integrity of financial records. So yeah, this was something I would like to mention, emphasize on that. Uh, Further, we have talked about these steps. So I will conclude by saying this, that digital tools actually offers immense potential for enhancing risk management, and we can take a lot of benefits of doing these automations and using the AI tools and machine learning tools. But most important factor, when we say that we need these kind of AI solutions and robotic process automation, is the key is here is to assess your own current infrastructure and assess your own needs and identify what can be done, and what is beneficial for the organization, because implementing these tools requires a lot of cost as well, a lot of time, energy. So so what happens if you have not assessed your system and your requirement correctly, then you're going for some high class solution or fintech solution or AI solution. So later on, you will see that the cost benefit actually is not achieved, because the requirement, assessing the requirement and needs of the banks or any organization was not properly assessed. So I think assessing your infrastructure, your requirements is paramount importance. And after that, you also need to see that how you can integrate. So poor integration of your system with the AI solution will also create more challenges. I mean, rather than reducing the efforts or reducing your or improving the efficiency, it will create more roadblocks into your processes. So this is a very important point, that how you assess and then identify that where actually the solution will integrate into your system. And I have seen in my with my own practical experience that a lot of banks actually faces these challenges, because first they need to see where they can use those solutions, and then they are struggling with the data, um, uh, categorization or data enhancements, because data is the main tool, or you can say the main thing in integrating these solutions. So if you don't have a structured or a cubicle data to integrate, so these are some of the challenges I've seen with my own experience, that banks integration steps are very important, and these can help us in achieving the great results. So I mean, with that, I can conclude my presentation, and if there are any questions, I will happy to answer.
Thank you very much, Sajid. That was a really interesting presentation. So, before we address one of the first questions that have come through, I'd just like to remind the audience that you can submit your questions using the Ask Question module, and that looks like a speech bubble with a question mark on it. And we'll try to get through as many of them as possible before time runs out. So, if yeah, great. So, I'll get started with one of the first questions that we have. So. We've got one question that is, how do you balance the need for innovation with regulatory compliance when adopting new technologies?
Okay, I mean, it's a very good question. So balancing innovation with regulatory compliance, like I said, can be very tricky, but it's definitely doable. So I can say, let's say, I can tell you how we can manage it. So first of all, you always start with the thorough risk assessment, like I mentioned. So before we bring in any new technology, we evaluate it for potential compliance issues. So this will help us to catch and address any problem early on. So I mean, continuously I'm mentioning this because it is of paramount importance that we do these things before we move on to the before we move on to adopting new technologies. So we also make sure to keep open lines of communication with regulators by staying in touch. we can ensure that we are meeting all compliance requirements as we implement new technologies. Another thing is security. Security is top priority. So we can use advanced security measures like encryption and multi-factor authentication to protect our data and ensure compliance with privacy regulations. So continuously we can monitor, and these continuous monitoring can help us to catch and fix any issue as soon as there is. Another important point, I mean, I have mentioned that is training of our staff. So we need to provide comprehensive training to on our new technologies. So what happened actually when the organizations implement the new technology, staffs are ignored. I mean, kind of, because uh, it is ultimately the staff or the human resources you have which will be using these new technologies and new solutions. So if they are not trained enough to use the full potential of that system, that's so that the whole effort is lost actually. So training is important. And lastly, the more important point is we can phase out the implementation. So we can do in small phases. We can roll out a new technology into stages. So we can minimize the disruption, and accordingly we can adjust accordingly. So another challenge I have seen personally in my experience, that when you put a full-fledged automation or the enhancement of the system, so it creates a lot of challenges within the organization, because some people don't understand some or it requires a huge kind of assessment. So in that case, I think doing it into the small phases can actually help organization. So by doing this, I think we can innovate and we can stay ahead, and we can also ensure that regulatory requirements are met. So that's how we can balance and stay flexible.
That's great. That's super interesting, Sajid. Thank you. We've got one more question that's coming now. What do you see as the future trends in digital risk management in the banking sector? So, yeah, I guess what's your opinion on that?
Yeah, I mean, that's a great question. So let's talk about where we see digital risk management leading in the banking. So first up, we have artificial intelligence and machine learning. So these technologies are getting smarter every day, and actually they are helping us predict and prevent risk more accurately. Um, Thinking of it like having a crystal ball that gets better with every use. So it allows us to spot potential fraud or risky behavior before it happens. So then there is a blockchain. I mean, this technology is actually transforming how we handle transactions, and by making those transactions more secure and transparent. So it's like a digital ledger, so that everyone can trust, and because it's nearly impossible to remember. Another thing I would like to mention, which is a future trend, is the cloud computing. So cloud computing is a big trend actually. So it's giving us the power to store and analyze the vast amount of data, and not only store, analyze, but analyze in a very quick manner and cost-effective manner. So which is actually crucial for real-time risk assessment. So we have also seen the collaboration with fintech companies. So I mean, these partnerships with innovative solutions, I mean, it's helping us to stay ahead of a curve. Another important thing, which is a regulatory technology, or we usually call it RegTech, is automating compliance tasks. So it making us it's making it easier for us to stay compliant and have I mean all the regulatory changes we have seen and we are getting, is these RegTech actually help us to stay compliant without bogging down to our operations. And of course, I mean, cybersecurity I think is always evolving, because these new technologies are creating more threats and risk. So cybersecurity is very important. So You can have advanced threat detection systems, and you can have zero trust security models, because these are becoming essential to protect our data from cyber attacks. So I think all these trends are helping us to manage risk more effectively and keeping our financial system robust and secure. Yeah.
Excellent. Well, thank you so much, Sajid. Really appreciate that answer. So I think that's it. And I believe that's all the time that we have, I'm afraid. So thanks again, everyone, for joining us today. And we look forward to hearing more about how these trends may develop, at the future Risk Minds conferences that we're going to be doing. And you can find out more about our conferences, especially Risk Minds Americas and International, that are coming up soon. Thank you so much. And thank you again, Sajid. We really appreciate it. And
thank you very much. Yeah. And one more thing, if you have any questions, you can send me to me directly, or you can send it to the platform. So I will be happy to answer if there are other questions. Thank you.
Excellent. Excellent. That's great. Thank you, everybody.